Hello everybody, welcome to TraderMerlin Show. It is your Monday edition, Casual Monday. See, I got just a simple white t-shirt on over here. And yes, hello everybody. Les is always the first. Not always, actually 90% of the time, Les is the first one. Good to have you with us, Les. Boss Poopa, Sue, Eric, Terry, Brian, Lisa, Jerry, Ivzy, Walter, and good to have everybody with us. Exciting day out there. Lots of action in the market. It was a great day to be a seller of options, if you were a put seller like myself today, specifically with regards to energy, which will be kind of the focus for today's show. We talked about last week on the OPEC meetings, which were kind of critical, and there was this little back and forth between Saudi Arabia and UAE, basically saying we're going to increase production and having to get that approved by the other OPEC members, the OPEC Plus. And all of a sudden, we saw a wonderful, wonderful meltdown today. And it was funny because it's actually like a double whammy type of storm, maybe even a triple whammy for oil. So that, of course, is how I came up with today's topic. Certainly, there were a few questions. Some on ExxonMobil and Chevron today, conveniently enough. But that's what we will focus on today. Hopefully, you guys have some questions along the way as well, or just color commentary to join in the discussion for today's show. So let's start off with the basic stuff, which is what happened out there in overall market. So let me bring up our list. I'll start at the top. Obviously, yields were looking poor today as well. We saw that 10-year Treasury spike pretty sharply. That, of course, means that yields are falling. You had gold down just ever so slightly. Down just slightly, 0.09%. This is as of right now. Of course, the markets have been closed for a little bit, but NASDAQ also rolling over right into a little tiny area of demand. And I'll dive into these deeper in just a second. I'm just trying to rush to get to the crude oil chart so we can start today's discussion. Russell 2000, which I sold some puts on today. And notice how quickly it's transitioned to that yellow box low. We are just bounced off it today right around 2100. So some good opportunities there. And then S&P 500 down about 1.33%, but still, it looks phenomenal, so don't freak out yet. Bitcoin and the whole crypto space really taking it on the chin. Doesn't seem like it can get a footing at all. This has so much to do with Janet Yellen really pushing regulators to look at stable coins and start to regulate those. And of course, that creates a lot of fear in the marketplace, but long run, I think it will be good. And then we have this one. A brutal down move today. It was over 7% slide. The biggest drop we've seen since April of 2020. So going back over a year, pretty vicious slide. Now, we've been watching this one. Obviously, the breakout above this $67 mark was a great ascending triangle pop. It actually met the measuring objective as well. And then the talk track has been... It's been this. We've got layers of talk tracks. Of course, CNBC and the major news outlets will be saying that this is all because of the fears of the Delta variant, right? There's always going to be something to keep people in fear. Who knows how lethal or dangerous the Delta variant of COVID is. But that has a lot of people thinking, this relief rally, which is, from most people's perspectives, this giant move up that we've had has really been all about things getting back to normal. Right? You and I going out and saying, I'm traveling, right? I've already booked 4 concerts I'm going to be heading to, most of which are out of state, going to check out different things, getting on airplanes, going someplace and traveling, right? Because we've been on lockdown. That's been this rally, right? This rally has been surging because of that. And of course, I think that you're seeing this surge up in demand for travel-related products, whether that's vehicles, which we looked at yesterday, whether that's airplanes and airplane tickets, and the prices have been going up there, whether that is hotels and out-of-state residences, places to lodging and things like that, that's all spiking. But remember, we've also had crude oil prices spiking. So I'm going to start with crude oil here. If we look at crude oil, inventory production numbers were slashed back in 2020 to accommodate for the lack of demand. Realizing that most of the world was going into lockdown, of course, the OPEC members said, hey, let's cut down our production. We don't need to be producing as much because that'll just crater the price of oil. So they slow down production to accommodate this lack of demand. They haven't raised it until now. The discussion is of them raising it. It's been a year. So all of a sudden we have demand surging for crude oil. We have supply staying the same roughly for OPEC. Therefore, we've seen this incredibly sharp rise in oil prices. And of course, going into summer, you heard me talk about, God, I really just think politicians will be putting some pressure on OPEC to raise production and help with the summer travel cost. Lo and behold, that's what happened. So you've got all of a sudden the supply increase, which should help for the overall prices to accommodate the demand, and that should drop the price of oil slightly. Layer on to that what happened today, which is this fear that this COVID Delta variant is going to all of a sudden put everybody back on a lockdown because Los Angeles is already putting their mask mandate back, and I think some places are legitimately locking down again, and who knows if we go full bore in California yet again, but that seems to be where the expectations are headed. So isn't it the perfect storm? You've got supply of oil just increased to accommodate super demand. Then all of a sudden, we might have a major threat to demand, which could put everybody back in their homes. And there goes your airline prices. There goes your travel. And of course, people are probably not going to go anywhere. And all of a sudden, we see crude oil prices drop. That's what we see out here today with crude oil. I'm not disappointed with it at all. I think it creates opportunities. I was actually in XLE today on a short trade for a day trade, and also sold some puts on XLE because I think we're headed down a little bit further, but not too much. I'm in the camp that doesn't think that this Delta variant is going to be as detrimental as they say. Well, probably the overly strict markets like California will lock down, but we'll probably get out of that rather quickly. Anyway, what does this mean to you and me from a trader's perspective? Well, if I look at these price charts, guys, yeah, Lisa just typed it in. Great buying opportunities. I think that is the way to view this. Certainly, I do believe that the overall markets were due for a pullback anyway. But if you look at the severity of the energy drop, you know, the Delta variance, Animal House. Love it, the Delta variance. So I saw some analyst there and he goes, this whole thing, it all revolves around sororities. And he goes, Delta, Delta, Delta. Yeah, it's all about Delta today. So I think that what happens is the industry, the markets latch on to a specific talk track. Right now it's, hey, we're going right back into shutdown mode, so we'll have to wait and see. That said, where are some of these buy points? We looked at crude oil, right? Crude oil, certainly there's some levels a bit lower. I actually do like the 61 mark, just slightly lower. And then really, if we get below, let's say 57, there's a long drop that gets us down to the next area, down around 52. So there's a few areas, 61, 57, and 52, that are the major stopping points for this thing going forward. I do think you'll see some pullback on it. But right now, you could be getting just buying coming in on this big dip. It's a pretty big drop for one day for crude oil. Now, if you watch the Monday Morning Must-Knows, we were looking at JETS, JETS. And JETS is an ETF which has pretty much every major airline stock in it, which is a nice way to buy into that entire sector and get away from individual stock risk. So you see that once we broke this line right here, which was kind of a descending triangle, it's just been in free fall ever since. We actually had a breakdown below it on the 28th of June. We retested it and has been falling ever since. In the Monday Morning Must-Knows, we talk about this lower level here as being a demand zone, not a great one, but still a demand zone right around $21. And that's where we parked today for JETS, which was down about 3%. So this is where you kind of have to put on your trader cap and say, well, what do I think? Do I think that this is going to be the bottom for JETS going forward? I mean, it's already dropped from about $29 all the way down to $21. An $8 slide is pretty significant for this bad boy. However, it could go down much, much further. And we'll look at some energy companies here in a little bit. My one concern for anybody who's like Lisa and thinking, hey, this could be a good buying opportunity here, which I agree. It just, to me, is about how much risk you're willing to take. What is the risk that you face? I am looking at this gap that goes all the way down to 1773 on JETS. And this is on a lot of airline stocks. There's a gap back around that day. This area concerns me. While I would be fine buying right now, I certainly would have to have a stop loss in place because I do think that right now fear is spreading rather quickly with regards to crude oil and energy, and that gap down at $17 could fit. Yes, ATR stretched out a lot of things today. When you have big range days like today, it obviously tweaks out your ATR quite a bit. And let's be totally honest here. I mean, it really isn't that big of a deal. For crude oil, it is, right? A 7% drop for crude oil is significant. But if you look at what happened with the S&P, the NASDAQ, the Russell, the Dow, you're down 1%, 1.3%. That's really not that big a deal. I mean, remember, there's days we were moving 2% to the upside, so a 1% down day, big deal. If we start seeing 5% down days, now you're back into February, March of 2020. Now, that was a pretty time to be panicked. So let's go deeper into this. Big Eb says sell puts at 18. Yeah, I think that might not actually be a bad call. You're probably not going to get great premium. Unfortunately, things are closed right now, but let me see if I can pull up the Jets option chain for this and see what the premium you might be able to get at 18. Well, that actually would be a great way to go about it, right? You could wait for it to fall, but if it doesn't get there, well, you didn't make any money, did you? So let me see. Let me grab my option chain here. Hopefully this thing doesn't get all wonky on me. And we're looking at JETS, right? All right, so I got Jets. I'll bring it over here, and you guys can look at that. So we're talking about going to the 18. It's currently at 21.57. So what might that look like? If you're buying, you want to go 90 days or more. Since we're selling, we'll just go to the next contract monthly, which is going to be August 20th. And you look at the 18s, you only get 8 cents. So you really wouldn't be making much money on those. If you wanted to get 1%, which is my monthly one, you want to get 1%, you got to look at the 19s. Even that, let's look at the 19s here. If I bump this line up to 19, come on, data, and we'll put that at 19. All right, that's the lower of these black lines here. It's actually not that far off from current price. I mean, if you look at the 19 levels, it'd be a drop from current prices of around 12%. So if you were to sell those 19 puts, you could be collecting 1%, and you're giving yourselves 12% further slide in energy. That's actually not too bad. It might be graphics, but you look like you have a sunburn. You know what? It's not the graphics, Jerry. It's I don't have a sunburn. You know what it is? Do I look really burnt? Yeah, it's the camera that I use. When I power down this system, it resets the camera. So I have to go back in and dial the changes. Yeah, there's sometimes it does maybe look sunburned. Man, if I had more time at the beginning of the show, I would have modified that. Sorry, I don't look good today. I've got to look good. Let's see if I can configure that one real quick. Yeah, it went back to auto white balance, which is the problem. I usually turn that one off. Let's see if I can get some. Oh yeah, we'll just go real dark. I won't do that now. It's going to drive me crazy. But unfortunately, yeah, I look like a sunburnt peach. Thanks for pointing that one out there, Jerry. Thanks for that one out. Make me all self-conscious about my appearance. Way to go, bud. Spray tan, Lisa. Please, come on. Look at this olive complexion. The only part where I might need spray tan is like my fingertips because of the vitiligo. Anyway. All right, now we're digressing, going down a totally different show topic today. Let's talk about cosmetic imperfections on today's show. And maybe it's because this shirt is so white, the imbalance is off. Yes. You know what? I might do a show from the beach. Why not? I usually don't go to Venice. I go to Huntington or Newport Beach is my hangout. Anyway, yeah, just that was kind of a random diversion from the overall topic. But, you could be selling puts on this. I sold some XLE puts today. Let me, I sold so many puts today. You got to look up my strike price to make sure you got the right ones. XLE, I sold 30 days out, and I want to say, I think I got 39s on this. I was trying to get right in this demand zone, but it didn't give me 1%. I believe I got 39s. Yes, 39. I think at the time I sold them, I got the 39s, which gave me 1% for the month. So, I mean, that's the trade that I'm in on that one. It's, is there a risk here for me? Absolutely. But, when we look at selling puts, if I get executed at $39, guys, I'm okay with that. Look at the long-term picture here, especially going back to these March lows of 2020. Right, we're certainly on a big uptrend. If we get all the way down to 39, that's probably about a 50%, maybe actually more than 50% retracement of that overall move. So right there, well, heck, it's exactly 50%, just a hair lower than 50%. So I'd be totally fine to get executed at $39 on this one. And right now, I'll collect 1% premium for taking that risk. Right, I could still short if I wanted to, but I'd rather not. I'd rather just in this, specifically in that 1% account, I'm telling you guys, obviously options expired on Friday. So this is just an opportunity for me to re-up those put options. So sold puts on silver today, XLE, IWM, SPY. What other one was there? I think I got some XLF as well. But just basically those are all 1 month ones. If you're thinking shorter term, obviously there's different things we can do, but I think it was a great day to be selling options because as this thing fell this quickly, premiums were really much higher than normal. So you could get a nicer payday today. $43 target Merlin for XLE if you are going short now. Yeah, I agree. You know, and really what you're looking at is this little base of consolidation, right? It's actually 30, just slightly under 34 would be for me. But yes, I think that that's your logical target. The only question I have right now with XLE is it going to make it past this low point? You can see that this low that we established on the 21st of April of this year, it's, let's see, a low is 46.25. Well, today we hit a low of 46.30. So it really feels like we're testing this level. And I'll put a line right across those lows. Bear with me as I get my snap tool on here. It feels like we're really testing out that low right there. So, you know, it could hold, although I feel just my gut tells me, and sometimes gut's wrong, maybe it's just indigestion, but my gut tells me that this is a situation where the fear factor is just a little bit too high and might be building, and we could actually get further downside move here. So be real careful if you're buying call options right now. I do think, like with Jerry, that 43 is probably a pretty good, or sorry, 43, slightly lower would be good, but we got to get below this 46.25 mark on XLE. Now, if you break apart XLE, you have ExxonMobil. Again, look at this picture of ExxonMobil. Beautiful, right into an area of demand. So if you're a supply and demand person, there are opportunities here, although I know some of you who are Online Trading Academy graduates are going to look at this and go, this is not the best level. No, it's not. Certainly when you apply something like odds enhancers to this, there would be some strikes against it, but overall, there would be some justification to be going long at this level on ExxonMobil, and also there was a question on CVX at Chevron. Chevron, obviously, way weaker. I actually like where it came to. Notice this little area here. It's almost an island of price. Oh, I'm sorry. You're on me. Sorry. I'm doing all this great analysis. Let me go back to ExxonMobil. So here's your ExxonMobil. You guys can see it came right back down into this price of $55. Great one. Yeah, I know, Lisa. I totally messed up on that one. Sorry. You know, this is where we say not all companies, even though they do relatively the same thing, they're not all the same. So you look at this price chart here of ExxonMobil. Now that I have the chart up for you, 55 to 54 and change, not a bad spot, but it's not the freshest area of demand. Now, if I go to Chevron, this one's very different. You can see that it broke below those lows yesterday, or I'm sorry, Friday. Aggressive break too, and now you're in this little island of price. I actually love price patterns like this, which is, I'll put a yellow box on it since you know I like the yellow box. Take it off of snap mode. This area right back in here is a decent area for me for a potential buying opportunity just because of the structure. And again, those that know odds enhancers, you know, this is a pretty decent spot. Not only that, but it's right at 95. So I'm a little disappointed that I didn't play this one, but I've got enough going on today with my other put selling going on. That 95, whole number psychology, straight into an area of demand, which has some really high odds enhancer scores. Great opportunity on Chevron. It's just weaker than the rest of the bunch. Okay. Thanks, Steve. Yes, my wonderfully charming good looks, right? No, the show's not sponsored by Coppertone, and honestly, I don't want it to be sponsored by Coppertone. I want this show to be sponsored by Blanton's. Blanton's, or give me maybe Michter's or something like that. I'd love to see the show sponsored by that. Or Orville Redenbacher, because we're going to do a popcorn trade of the day at the end of the show today. All right, let's see. Lori says, I sold calls on XLE. It was put to me on Friday. Okay. It's a question of, did you want to get put those? Yeah, it all depends if you want to. Owen says, I'm getting educated with Online Trading Academy and not currently managing my Fidelity fund. Should I go in to cash or let them keep me in the market? Owen, that's a great question, and I'm not a financial advisor here. It's just a matter of what's your personal preference, right? If you are okay with having some tumultuous market activities, and I guess it depends also what you're in. If you're okay with those kind of fluctuations, then stay in it. If you're kind of nervous that these markets are starting to roll over a little bit, we're hearing about COVID lockdowns, we're hearing about all kinds of little negative things floating through the market like inflation, then probably the safest thing to do is to go to cash, right? The only thing that going to cash hurts you on is A, you're going to pay a couple bucks in commissions to get out of those positions that you're in. And number two, if all of a sudden the market just rips to infinity and beyond, you're like, damn it, I missed out. But what if it doesn't, right? What if the market craters 10, 15, 20%? Who knows what can happen? So, and it's really a matter of what you feel comfortable with. If you're in that position of uncertainty, then just go to cash, especially if you're learning and taking classes, because what happens is you really want to focus on your education and make sure you understand all the rules and everything. Quite often when you have a portfolio or positions open at the same time, you end up focusing more on the positions in your portfolio than you do on the education. So I personally would probably go to cash. It really depends on your tax liability for those positions and what your personal risk tolerance is. So whether it's, thank you, Gretchen. Thank you. Let's see. Gut trades make great traders. I think so too sometimes. Unbelievable says, selling cash covered or naked? I always sell cash covered. Always. I don't want the risk of it. I don't want to be run the risk of being leveraged out of something and have crazy calls against me, margin calls, etc. So I don't want to be using margin as well. So the main account that I talked about, my 1% strategy, which I do every month, that's all cash. I don't use one penny of margin money. You know, it's easier for me, safer that way. Could I make more by using leverage? Yes. Could I lose more? Yes. And in that account, it's sizable enough where I'm just really concerned with making sure if I lock down 1% or more per month, then that account will meet all my objectives that I have set for it. And I think that's the important piece, right? Is knowing that this account has specific goals and objectives. In that case, I need 1% per month. So, I went through today. I'll just show you some of the other ones. We were looking like SLV. I sold the 22s on SLV today. This is the old one. This is the one that expired. So I sold 22s today. Why? Well, it's below this great area of demand that goes all the way back into March of this year. I'd be happy owning silver at 22, right? No big deal there. IWM, I sold the I got him. I don't have them written down here. I think I sold the 197s. Like, it was way down here below these levels. I think actually it was 197, and that gave me it was about 1.5% on the 197s, and I'm still kind of using this 206 mark as a backstop for IWM, right? I feel like that's going to kind of hold it. If it doesn't, fine, it'll drop more. This is probably the riskiest one that I made, or option that I sold today was the IWM. XLE was another one. I'm down at 39 on XLE. So fine with that. I mean, if I get executed in that, that's no problem. I'm happy to hold that one. So these are just a few of the ones that we entered into today. Let's see. Merlin, you should have the donkey of the day more often with everything happening in the... Yeah, the tough one here is... some people don't like to be called the donkey of the day. I'm actually trying to do something else, but I have so much going on, guys. I know that you appreciate it. I know you do. But boy, it's tough when again, this show produces no income whatsoever to do this every single day when I have so many other things I need to focus on. But I wanted to do one thing. I'm trying to do it. And what I want to do is I'm trying to make a video where I'm showing insider trading on price charts. And I want to make a video mocking the SEC and their inability to track it, because it's really easy to spot. You can go out and find any major headline where maybe a company was upgraded or downgraded, or there's a new announcement coming out, or there's a merger, especially merger talk or drug approval. And then you see, like, the night before that announcement was made, volume's 5 times higher than normal. Clearly insider trading. And how the SEC does not bust more people for it blows my mind. So that's one of the other things I'm trying to work on. Did I cover CL? Yes, we did, Scott. We covered it near the top of the show. Crypto class happening soon. That's a major part of my time consumption. We built 8 classes today. I did 8 more. We did 7 today. And I say classes, they're videos that go between 3 minutes and 20 minutes. So we did 8 videos on Friday. We did 7 today. We'll probably get another 20 of them done this week, and hopefully we'll be ready to roll by August 1st with the crypto course. But it's just a ton of work right now, which is why I've missed a couple shows. So I apologize for that, but it happens. After I took Strategic Investor last March, I took over my entire portfolio. I care more about my money than Schwab does. Hell yeah, you do, Lori. Absolutely. And not only that, but and Lori is not a plant, guys. She's not a shill. I'm going to ask you, Lori, because I've never asked you this before, but would you say that it was probably one of the best classes that you've taken? I know it's a very subjective thing with regards to trading or investing, right? You can study stocks, options, futures, Forex, real estate. I mean, all these things are great. But if you look at how much capital each of us have in a longer term account, 401ks, IRAs, that thing, it's generally a much bigger pool of capital. And nobody really teaches you how to manage that. And unfortunately, I'm worried that a lot of people will try to go into their 401ks and really actively trade that. That can be dangerous. You shouldn't be doing that, in my opinion. Your 401ks, yes, maybe become more slightly involved with it. But once you have the rules and structure and strategies, you don't need to be making that active of trades in your 401ks. So for me, Strategic Investor, I had the luxury of working with Todd Davis, Larry Jacobson, Russ Allen on building that Strategic Investor class. I think it's the best class we've got. It was absolutely amazing. And honestly, I wish that we could find a way to make that class mandatory for anybody in the United States, because it's all about structure, discipline, how to grow your capital, not aggressively, but just grow your capital securely over time, even when markets tank. Anyway, I sound like a sales pitch here, but want to know more, check out Online Trading Academy. Yes, Jerry's SEC is the backside of the donkey, but obviously it's probably not in my best interest to continually go after the SEC, even though I think in many cases they are completely incompetent. Let's see, what else do I got here? One second. Let's see. Thoughts on VIX or VIX options trades? Not really, Tom. I don't spend too much time looking at the VIX. I mean, I'll bring it up here for you guys. When you have a VIX like it has been, which is under the low teens, it makes you feel like you should automatically be buying the VIX because historically it's not in the low teens, right? It should be higher than that. When I was first introduced to VIX, it was basically if it's below 20, remember VIX is low, time to go. So if it's below 20, you should sell out of your long positions. And VIX is high, time to buy. Those parameters on VIX were 20 and 40. So that was the upper band would have been said, if it got above this blue line, then you should think about loading the boat and buying stuff. And if it got below this lower blue line, then you should think about selling your long positions. Sad part is if you follow those rules, you would have unloaded all your long positions way back in May, right after the market took a big pop. Actually, no, you would have gotten rid of your positions here in December. So it's generally lagging to me from that perspective. All I like to do is see the increased volatility because as an options seller, the premium generally spikes, and I want as much premium as I can get. Zoom into year-to-date on VIX, just year-to-date. Sure, absolutely. There is year-to-date 2021. So this whole screen is just this year. And this is where you get in trouble, or at least I think you get in trouble, because Tom, if you think, VIX is VIX is high, time to buy, VIX is low, time to go, this is telling us that it has been stuck in that low position for quite some time. And a lot of people feel that if it stays down there, that's the higher probability is that VIX is going to spike, which basically means that markets are going to tank, right? A rising VIX means people are fearful in buying puts because it's all that VIX measures is the put-call ratio. So from a technical perspective, I don't really apply supply and demand, breakouts at all on VIX. Let's see what part of your question was. I had a call close for profit today and went short at 24 to ride the spike back down. It seems so reliable. I'm nervous about that one, Tom, because if we get follow through, while it may be reliable, it could also break real quick, right? Today was not a big day down for the S&P. If you look at the overall numbers for the S&P, it really wasn't that bad of a day, right? You're 1%, big deal. Here's the S&P, 1.33. Grand picture, sure, it looks like a huge day, but it's really not. If this momentum persists and the talk track that the media pundits push on us is even stronger, that we are going to see the Delta variant shut everything down again, would it be unreasonable to see VIX down at 4,000? I mean, that's only 260 points away. I don't think that's unreasonable at all. And if that does happen, what do you think is going to happen to VIX? VIX is going to really spike. So if you go short that VIX and this thing, let me bring up if you go short VIX and we end up really falling quickly, your VIX moves much faster than a normal equity. right? Today was a 4% swing in it. Actually, more than that, sorry. Today was a 22% swing in VIX. It could go way, way, way more than that. So, yeah, just be careful with that one. It makes me a little nervous because I've been waiting for, I'm not going to call it the black swan event, but I've been waiting for that kind of market capitulation where everyone's like, holy shit, and just starts selling everything and freaking out. Today wasn't that day. But another couple bad news types of days, that could happen. I mean, tomorrow is going to be a very interesting one. Why? Well, what time is it? Holy cow, we're already at 32 after. Tomorrow's going to be an interesting day because I will bring up, where was it? It's this one. I don't have any music to this one, but I'll throw a little popcorn trade of the day. Yeah, I need some better theme music, right? My show sucks. Popcorn trade of the day is going to be Netflix tomorrow. So, when we look at the earnings front, there's obviously a bunch of companies reporting earnings, but I wanted to kind of put this one on the list because to me, popcorn trades of the day are awesome. I love popcorn trades of the day. Why is it a popcorn trade of the day? Well, I will bring up Netflix here as I'm trying to switch 15 different things. NFLX. Here's Netflix. A couple days of weakness, but it's really the bigger picture that I wanted to focus on. Does Netflix look like it's really going anywhere? It doesn't. And I'm not really feeling like Netflix has tremendous upside potential here. And they're reporting earnings tomorrow. So there's 69 companies reporting earnings tomorrow. Netflix is at the top of the chart. That's after market close. So I would definitely keep your eye on that one. If you are interested in other companies reporting earnings tomorrow, you have Netflix, Intuitive Surgical, HCA Healthcare, Philip Morris, United Airlines, Halliburton, and Chipotle. I think I have single-handedly kept Chipotle in business over the past few months, over the past year. They put in a drive-through, but it's not a drive-through. It's just simply a drive-through pickup. You can't go through the drive-through and order. You can only drive through to pick up pre-orders. And my house is 5 minutes away from one, so I just order, drive down, and get it. So anyway, love it. That will be reporting earnings tomorrow, and I think that'll obviously be a critical one for me is the Netflix side of things, not necessarily Chipotle. I don't think it's going to impact the price of my burrito. Let's see. I had another question here. DocuSign, huh? All right, let's go look at DocuSign. Let's see. I always want to make sure I get the gentleman who sent that one. Where was that? It was way back here. Oh, where was DocuSign? Sorry if I don't give the guy props. I saw you mention it, but I can't see it in the chat. I'm moving too quickly here. Uh-oh. Sorry for that, Lisa. Sometimes you do get some bad people. Every now and again, not all salespeople are created correctly. All right, I can't see the gentleman who asked about DocuSign, but I will read through it anyway. Here is the DocuSign chart. Looking at DocuSign, obviously something's going on with them from the June run. Looks awesome. The only thing that makes me a little bit nervous is you have this really big run here on DocuSign, and this is a daily chart, by the way. Huge run from, we'll call it sub 200 to $300 in less than a month. That's awesome. Phenomenal. Congrats to DocuSign. That's some great shareholder equity buildup. But it's done it with very low volume. Or not very low, but it's the same volume, right? Nothing here really changed. Of course, you can see they had an earnings announcement, which is what caused this big pop. What do I think of it? I'll tell you what. I wouldn't take this trade. And again, that doesn't mean you can't. It's just, for me, it's not going to work. Why? Well, look, let's put some lines on the top here. I'm just outlining the most recent range. And that range takes us from about, I'll call it 300 all the way down to 270. So I've got a 10% range, $30. I'm right in the middle of it right now. So if it breaks above 300, I might consider it as a continuation of this most recent rally. But normally you have to get a real big surge like this after earnings. It'll rip up for a little bit and then slowly start to fade back. So I would be more inclined to look at a short below 270. But right now at 289, I just wouldn't touch it. I just really don't think that it offers a lot here. It really doesn't seem to be offering a lot of potential for a high probability trade. Not that it's not going to work, but that's it. Let's see. IWM kind of looks like exhaustion on the daily. I agree, which is why I was very happy selling puts today on Russell. It's same thing. It looks just like Netflix, right? It really hasn't done much. Yeah, it's got big swings, but you're right near the bottom end of the range. So I'm okay with that. Selling puts, and again, I sold mine much lower than current price. 197 is the strike price that I'm in, but that's also for 30 days out. So we'll see how that one pans out in the next couple of weeks. I think Ford will be good earnings trade. Seeing a lot of those Mustangs and EVs out there lately. Oh man, Man, we went car shopping over the weekend, and what a nightmare. It's funny, I've never had a dealer compliment me on my truck. I'm a simple guy. I love trucks, and I want reliability. I don't care about fancy emblems. If it says Mercedes on it, it really doesn't bother me. Who cares? I'm a Toyota guy, right? I want my repair bill when I take it to the mechanic to be like $100, not $2,000. I think Brendan Wendell said the oil change on his Maserati was $2,000. Are you kidding me? Why? Who cares? So I have a little trident on my dashboard. Anyway, I have a Toyota Tacoma double cab TRD off-road 4x4. And the guy just kept complimenting me. He goes, man, you've got some equity built up on that thing. You got some equity. I'm like, I didn't buy the car to build equity, but it's funny. The used cars are now going for just about as much as the brand new car sticker price. So we made an offer on the brand new Toyota 4Runner is at $42,500, and the guy's like, nope, it's $5,000 to $10,000 more. He goes, I'll sell you this one for $49,000. It's like, no, I want sticker. It says on the dashboard $42,000. Now we're marking them up. Crazy market right now. Really is unbelievable what's going on with cars. We saw that with the CPI data. Obviously, the used car sales numbers were just unbelievable, but the new car numbers were still elevated as well. It's just been a crazy time. So what about Ford? Let me go to a different platform here. All right. So, and that's an interesting one to bring up there, Eric. You look at the price chart here. You have one of my favorite patterns in the financial markets right now on Ford. You had this nice rally goes up from May. It has a little bit of a pullback here in the middle of May and then rallied even further. And this is the first real big pullback. It fell right down into that area of demand, literally the bottom of the area of demand I would have drawn. It's on much higher than normal volume, right? Actually, not much higher. It's just higher than it has been over the past couple of weeks. And you have a hammer formation. So if you're looking at Ford thinking long, well, I would check out a break above 1332 tomorrow. If it opens below 1332 and then starts a rally above it, I think you might have a nice long trade on your hands here. But again, anytime you're going against the trend here, you have to have solid risk management in place, or you're going to get smoked. All right, what else do I got here? More people out of the house. Fundamentally, Netflix can't continue to go up. Yeah, well, I guess maybe, Jerry, if all of a sudden we go back into lockdown, the assumption was Netflix would do well, but how many people have canceled their Netflix? I started my Netflix because I'm in lockdown, but I was in lockdown in California, but am I gonna cancel my Netflix? Probably not. Yes, Chris the mechanic out there says the Mach-E looks good. I love the performance of it. You can't call that a Mustang though. The Mustang Mach-E, it didn't even look like a Mustang. They should have made a whole new brand out of it, but I think it looks really cool. And some of the performance numbers, I saw a guy that took it to the Dakar Rally. They took a Mach-E and, off-roaded it. Wow, incredible. Really a cool looking machine. But yeah, I really haven't been much in the hybrid or EV scene. Who knows? Maybe in the near future I will. I'm actually waiting for the Toyota Tundra. Next year they come out with a hybrid, which I would be very interested in because 13 miles a gallon for my Tundra. Not going to happen. All right, let's see. Let's go to economic calendar for tomorrow. So we talked about the earnings. Really, it's the biggest day for me is next week because you have not next week, this week, because you have Netflix starting things off. If you're looking for economic announcements, there really wasn't anything major out there today. Tomorrow, there's a little bit more. You have building permits and housing starts, which, of course, is important because it's summertime. That's when those numbers should be surging. The expectations are that they are going to move up, but just barely, not a lot. And this is when those numbers, in my opinion, should really be moving to the upside. Australia also has retail sales numbers coming out tomorrow, and that pretty much does it for the fundamental side of things. So let's see. Guess for tomorrow, we're going to have Don Fron. There you go. Almost forgot. Don Fron will be our guest on tomorrow's show. We're going to talk about all kinds of stuff. Really, whatever you guys want us to discuss would probably be the real deal. So if you have something specific, you can check out the email here. Email me at TraderMerlin@gmail.com, and we'll discuss whatever it is. Don has his opinions about things, as do I. Some might concur with your viewpoints. Some might be totally different, but that will be the show for tomorrow. It should be a lot of fun. I'm looking forward to it, as we always have a fairly entertaining discussion. Now, last one here is I saw Tom says, sorry, it wasn't Tom. It was Alan G. Thoughts on Nvidia split tomorrow? Yeah. Remember, we talked about this before, and my thought was there were a lot of people that wanted to go short Nvidia, and I was like, wait till after the split, because normally it'll gap up, on the split day. It usually runs strong into the split day, and then it comes back down. So if you look at the price chart here, it looks like it's already happened. You saw a pretty significant drop in the price chart of Nvidia here. Its peak that we saw back on the 7th of July was 835. It's at 751 right now. So that's a pretty significant slide. It fell a little over $100 per share. Now, to me, it's going to be very risky tomorrow to be trading that one. My bias would be to the short side simply because it's already moved so much. It's probably already priced in, although, I mean, look at those three big red candles. Those are called three black crows. And three black crows usually leads to a trend reversal, according to Steve Nissen, the candlestick expert out there. He literally wrote the book, or the books on candlesticks. Those three big, solid, expanded range candles that close near the lows, that's usually setting up for reversal. So my guess is you'll probably see this gap up tomorrow on Nvidia. I would wait and see, but my bias would be probably to start shorting Nvidia. I think they're an amazing company. They've got just demand off the charts for all their chips, but it's been a huge rally up here, and that split will finally be over. So wait to see what happens in the morning before if you decide to go short on this one. Just wait and see what the market dictates at the beginning. All right, let's see. Eric says, I think Ford will be a good earnings trade. Seeing a lot of these Mustang EVs out lately. Yeah, I mean, it's a pretty nice looking vehicle. Good. Alan, personally, I think you'll see a gap up. My guess is, and this is just off what I've seen historically on earnings splits, it'll run a little bit to the upside, and then it'll start to sell off, as a lot of these people who are buying for the split will start to sell off the shares once they finally get that split. All right. I think that's going to do it for me for today, guys. We talked about economic calendar. Really, the big name tomorrow to watch out for is going to be Netflix. That's after market close. Of course, we'll bring up the 1 minute chart and call that our popcorn trade of the day. The reason it's going to be the popcorn trade of the day is because it moves so much, NFLX. What I like to do is I like to set up a 1 minute chart, and I'll put the 24-hour time period on so you can see after hours. Obviously, you'll see the volume just disappear, but then you get to watch when that announcement comes out. It'll probably have a 10% swing. It usually does. Believable Direction says, does Larry Jacobson still like Nvidia? Yep, that he does. He's in it for the long haul, man. I've never seen anybody who just holds his views on something. But again, he's all fundamentals. I'm more technical, so we all have our faults, I guess. All right, guys, that's going to do it for me. Thank you so much. Hope you enjoyed it. I know some of you aren't following the energy markets, the energy sector, but big moves out there. Certainly, I think can create some buying opportunities just by how quickly this thing moved to the south side. There was a lot of stuff on sale today. That doesn't mean that it's the lowest it's going to be. I think it could still potentially go lower, but I think over the long haul, we'll probably be okay with energy. Really depends on what the media portrays over this Delta variant and how we all are, the sheeple freak out about it. All right, tomorrow's going to be with Don Franz. If you guys have a question for Don, do me a favor, email him in at TraderMerlin@gmail.com. You can send me any questions you want there. You can also put your comments down below the YouTube video. That always helps me out. That said, have a fantastic day, everybody. Go out and enjoy some sunshine. I hope it's a beautiful day where you're at because it's gorgeous here. I'll see you tomorrow. Take care.